because they're dumb. They don't lose because their strategy is bad. They don't lose because they watch the wrong videos. They lose because one trade is allowed to hurt too much. That's it. It feels like it's that simple because it is, because it's true. Everyone is busy tweaking their indicators and chasing a setup and following a new mentor. But the real problem is they haven't protected themselves. You haven't protected yourself from one bad trade ruining everything. So in this video, I'm gonna show you the real reason 90% of traders lose and why nothing else matters until you fix this. Section number 1, the beginner's myth. Beginners believe, if I just find the right setup, I'll make money. So they study their patterns and they learn supply and demand and they watch YouTube tutorials and they back test strategies and they take screenshots of all their trades and they say, my strategy works. I just need discipline. I said this exact same line to myself. I did, but the truth is, if your strategy actually worked the way you think, why does one losing trade feel like it's wiping out weeks of work? It's because the real edge survives loss and a fake edge could never. It just doesn't hold up. Most beginners don't have a strategy problem. They have a risk problem. Section number 2, even the best traders, even good traders lose. You can be right on your direction. You can be right on the timing. You can be right on the bias, but you can still lose money at the same time because options doesn't punish you for being wrong. It punishes you for trading too big. Most beginner accounts do not die slowly. They die in 1 or 2 moments. One oversized trade. One, this looks too good. This is amazing type of trade. I'll make it back tomorrow type of trade. If one trade can hurt you badly, you never had control to begin with. Section number 3, the real reason. The boring truth that nobody talks about is most traders discover risk after the trade. They enter first and they hope the loss is not too bad. That's not trading, that's literally gambling with extra steps. Risk management is not something that you'll add later. It's not something that you think about when you're profitable. It's not something that you tighten up once you're consistent. Risk management decides if your account survives to live another day. So if you don't know how much you can lose, how much losses you can handle, and how often you can be wrong, then when you're trading emotion, you're not trading a system. You're literally trading emotion, not a system. Section number 4, the core reframe of all of this. Trading is not about making money. It's about not losing it. Anyone can make money on a lucky move. It's a 50-50 chance, up or down. It's a 50-50 chance. But only traders with defined risk can survive long enough to actually grow or compound their account. So if your account can survive 5 losses in a row, 10 losses in a row, a bad month, your account is already dead. It just doesn't know it yet, and neither do you. That's why beginners feel so stuck. You feel emotionally drained. You feel like you've overtraded. You're scared to pull the trigger. Now you're literally not wanting to take any trades at all. It's not because you're broken. It's because your risk is undefined. You have not defined your risk. In section number 5, I'm going to set up the series for you. Okay, here's the deal. I'm not teaching a new strategy. I'm not teaching a new indicator. I'm not teaching you a shortcut to profit. I'm teaching you how to stop letting one trade ruin everything. How to stop blowing your accounts and survive to trade long term. So the next video is risking the wrong amount per trade. We're gonna cover the exact math. It's 3rd grade math, by the way. Anybody can do it. Why most people get it wrong, why even small accounts survive, and how professional traders think about risk. Once risk is controlled, everything else will finally work. So if you've ever felt like one loss hit way too hard, or you're chasing these red days and avoiding trading because you're having red days, or your confidence disappears after one losing trade, This series is literally made just for you. So subscribe and stop letting one trade control your entire future. Watch the rest of this series and stop letting one trade define your future. Risk is the only thing that really matters. And I'll see you guys in the next video in the series. Let me tell you why beginners ignore risk management, or why most beginners ignore risk management. It's because it's boring. There's no dopamine, there's no excitement, there's no screenshots of all the fun things, all the full porting, which means throwing everything in your account into one trade. That's what a full port is, right? There's no screenshots of that, but that's exactly why this works. That's why risk management works. So in this video, I'm going to explain why boring trading saves your account, why exciting trading is what blows it up, and why you hate risk management, why you probably need it the most if you do hate it. So this is not about getting rich fast. This is not about keeping everything. It's about losing slowly. Why beginners chase excitement, section number 1. Section number 1, most traders want to feel good. They want big wins, big moves, big days, 400% a day. They are looking for excitement, but here's the problem. Excitement is not a signal. Excitement is a literal trap, and when trading feels exciting, let's break this down. It normally means, I'm not saying all the time, I'm just saying normally, it means you're oversized, you're emotionally attached to your trade, and you're probably likely breaking your rules. Professionals do not chase feelings, they chase survival. Can my account survive another day? And that is strictly through risk management. Section number 2, why boring trading actually works. Boring trading looks like this: small size, few trades, long waiting in between the trades you take, 3 or 4 days in between each trade, short execution, in and out, right? That's it. There's no rush, there's no pressure, there's no urgency, there's no need to win today. That's the biggest thing. There's no need to get a win or get profit. Boring trading protects you from yourself, from that human error we have, because when nothing feels urgent, you don't make desperate decisions. Desperate decisions are what blow accounts. Section number 3, the pain most people are running from. Let's be so honest right now. People do not want excitement. They want to stop the pain. Stop the pain of giving profits back, blowing your account, feeling stupid after a trade, starting over and over and over again, refunding your account over and over and over again, buying a new prop firm, buying a new prop account over and over and over. Risk management does not promise pleasure, it promises less pain. And that's why it works. It removes the moments that destroy traders. Section number 4, why beginners resist this so much. It's because most beginners say, I know risk management, I just need some discipline. No. If you understood risk, you wouldn't need discipline, because you can't feel tempted when you've pre-decided your risk. Proper risk literally removes temptation. So when your loss is small, your brain stays calm. And a calm brain is never going to self-destruct and start placing revenge trades. Section number 5, the real reframe in all of this. So the shift that changes everything is that trading is not what you do to feel good. You're trading to stay alive. You're trading to keep your account alive, compound your money in your account. Exciting trading feels good now, but boring trading feels good later. Every professional trader that you respect chooses boring every single day. Not because they lack skill, not because they can't trade every day, not because they can't make money from trading, it's because they respect risk. Anton Creel says risk management is what keeps traders in the game. And this is what he means, this type of risk management. So if trading feels stressful, you're doing too much. Slow down. Stop trading as much. Lower your risk. Accept that it's boring. Accept that there's no screenshots. Accept that this is the life and industry that you chose, and it's not all caked up to be what you thought it was, but it's going to be the thing that can make you money. So in the next video, I'm going to show you the exact position sizing mistake that turns good setups into account killers. Make sure to watch part 4, because exciting trading really feeds the ego, but boring trading protects the account and it compounds your money. Most traders end every single trade the same way. You check your P&L, you check if it's green or red, you check if it was a win or loss, and then you move on with your day. And that's the problem, because money tells you nothing. It does not tell you anything. In this video, I'm going to explain exactly why your P&L and money at the end of the day does not tell you anything. It tells you nothing about who is actually in control. And there's one actionable thing you can do to change this right now. So after every trade, ask yourself, did I trade as the version of myself that I respect, or did I trade as the version of myself that wanted relief? So I'm going to explain what relief means, but this question makes you very uncomfortable, or it should make you uncomfortable, because it removes the hiding places. A win does not protect you in your trading. Relief trading is when you take a loss and you think you're going into the next trade or the next trading day calm and controlled and professional, you know what you're doing, but really you're just trying to find relief, because underneath it's driven by urgency. You need to feel okay again. You need to prove to yourself that that loss wasn't part of your identity, and that you need to prove yourself that you know how to trade. You need to prove yourself that you can escape a certain discomfort that you may have had from taking a previous loss. But I'm here to tell you, the most dangerous trades are relief trades that win. Because if you win that trade where you're trying to get money back, it reinforces behavior that eventually destroys your consistency. Identity aligned trades often feel very boring because they do not give you any dopamine. They don't validate your ego. They don't make you feel heroic. Oh, I broke through. I know how to trade. None of that is there. There's no arrogance that comes from it. They just compound, and money is the reward. Honestly, when you're a trader, money should be your reward. But it's more about something deeper, because most traders evaluate their performance based on the outcome. Did I win or did I lose? But those who are consistent long term evaluate based on behavior. Who was I trading as? That's literally the question. Who was in charge here? Was it my logic or was it my emotion? Was it structure or was it impulse? And you have to ask yourself these deeper questions, because the answer can really lie very deep. But most traders avoid this because it's honest without a reward. There is no dopamine. There is no external validation. There is no feeling like you're the best trader on earth. There's none of that. It's just about the truth. But identity drives behavior. And until your identity is addressed, strategy is not going to change anything. And if you do change your strategy, it's not going to last. The practice and the backtesting and the journaling is not going to fix your trading. It doesn't fix your trading. It aligns behavior with who you say you want to be as a trader. And that alignment is what creates the consistency. So if you've noticed that you're a trader who already knows how to trade, yet you still keep blowing accounts, I want to invite you into watching the private training in the description. It is the first link in the description, because this is not a flaw. This happens to almost every trader, and is a part of your journey that I don't hear talked about a lot, and I invite you to watch that training. I want you to comment down below, have you ever avoided asking yourself this question? You may have thought about it, but you have avoided wanting to answer this question because you thought ending the day green, or ending the week green, or ending the month green meant more than your behavior. I definitely want to hear that. I'll be down there in the comments reading your stories, but also responding, so I'll see you there. If you're learning from this, make sure to subscribe, because most day traders know what to do. They just never execute it. Most day traders believe they lose money because they misread the market. My entry was wrong. It's because my stop loss was off. If that were true, if that were like the only reason, then improvement would be very simple. You would just fix the setup. You would just learn more. You would optimize the strategy and just fix it until it worked. Yet most traders already know what they should do. They just don't do it. And that's why improvement isn't as what it seems. Like, this contradiction is the clue, because the truth is very, very uncomfortable. The majority of trading decisions are made before analysis ever begins. It's not conscious. It's not logical either. It's all emotional. Every single trade comes from an emotional internal state. A psychological posture that you're in is going to determine what happens when you open the chart, because your internal state is going to decide what you notice, what you ignore, what feels obvious to you, what feels urgent. So two traders can literally look at the same chart, the same ticker, and one waits very patiently, and the other one's going to force an entry. Same market, same data, two different internal states in the same exact market. And that is why post-market journaling fails majority of the time, because it assumes the decision happened during the analysis, and it doesn't. It happens before the analysis. So I'm going to slow this down, and in this video, I'm going to break down about your last impulsive trade. Don't look at your last worst trade. Look at your last impulsive trade that didn't feel clean. Before you entered, were you calm? Were you trying to make back a loss? Were you bored? Were you riding confidence from last week because you won a lot last week and you feel like you're just that guy or that girl? Most traders can't answer that question. It's not because there was no internal state. It's because you're not acknowledging it. And honestly, emotion does not announce itself. It doesn't say, hey, I am feeling very frustrated right now and I'm about to override your entire plan. This is an A+ setup, but I'm about to make you lose everything you made last week. And we don't notice it. And that's why awareness is so hard, because it is intentional. It's like a very intentional decision. And that's why before every trade, you have to stop for 5 seconds. You don't analyze, you don't put any key levels, you don't rationalize, you don't adjust the charts, you don't pull up 2 tickers to start just watching stuff. You first look at yourself and you label your internal state with one word. Are you confident? Do you feel rushed? Do you feel bored? Are you on a time constraint? You're trying to force a trade into a time window. Do you feel hopeful? Do you feel detached? Do you feel frustrated? Just label it with one word before you ever look at a chart, because your internal state is going to dictate what happens on that chart. It doesn't matter how much knowledge you have, you can still blow an account if your internal state is frustrated and you're trying to force a trade. And the reason why this works is because when you're naming an emotion, it creates separation. The moment you label it, you now are observing it. You're now aware of it. And that small pause, whether it's 5-10 seconds, is literally what can save your account. And most day traders skip it because it feels very soft. It feels very simple. I've come so far. You're telling me to just not do a trading thing. You're telling me just sit for 5 seconds and think about my internal state. Because this is the resistance is literally what's going to tell you what the problem is. Because under pressure, this is where control disappears. The deeper truth is that you do not need better discipline. You don't need more journaling. You don't need more praying. You don't need more meditating. You need to be more aware of how you feel earlier. Because by the time discipline shows up, the emotion has already been there. And that is what dictates what happens on the charts. And if you don't ever see that clearly, then nothing else is ever going to stick. And it's really not laziness if you haven't done this before. It's just that most traders usually skip this. And this is the foundation. Without it, every single rule is fragile. Every single rule, every single piece of experience you have cannot withstand an unaligned emotional state. This is where real change starts. If you're an experienced trader and you continue to blow accounts, I really want to invite you to watch the private training that is the first link in the description box. It's going to show you exactly why you're still doing it, although you know exactly how to trade and you have the experience, but you have a good running streak and then you lose it all. You have a great running streak and then you can't seem to make a win. It's going to explain that directly to you. I want you to comment down below the last time you had an impulsive trade. I really want to continue the conversation in the comments so that I can just get to know you guys a little bit more, and I'll see you down in the comment section. Let me tell you the fastest way people blow accounts. They risk too much on one trade, not on purpose, not because they're reckless. It's just that they never decided the number. And we're going to talk about what that number is in this video. Watch to the end. Every single trade becomes a surprise when you don't decide that number. So in this video, I'm going to show you the exact mistake beginners make with risk, why one loss hurts more than it should, and the simple math that stops accounts from blowing up. It's not about making more money. It's about making sure one trade does not wreck you. Section number 1, the mistake every beginner makes. Most beginners think risk means how much money can I make? That's not risk. Risk is literally how much am I willing to lose if I'm wrong. In trading, there's a 50-50 chance But you still have to ask yourself that question. The problem is, most people just never ask that question. Like, they enter the trade first and they find out the risk after. Because you think having a 50-50 chance is enough for you to have to figure out the risk after. And that's why losses feel very shocking. That's why a lot of people panic, and why beginner accounts are known to disappear in the first 90 days of funding your account. If you don't choose the loss first, then you're not in control. The losses are in control of you. Section 2, why losses feel so painful. Have you ever taken a loss and it ruined your mood? You thought about it all day. You took revenge trades and it made you break rules. And that loss was way too big. Not in dollars, but it was way too big emotionally. So when a loss hurts you, your brain goes into fix-it mode. That's when people increase their size, they skip their stop losses, and you hold a trade until it either dies or your entire account is blown, or you take really bad trades. The goal is not to avoid losing. The goal is to make your losses so small that they no longer control you. They're like this. That's what a proper risk management plan does. Section number 3, the simple rule. Here is the rule that professional traders live by, the ones that have traded in Wall Street. One trade should never matter. That means one loss doesn't change your life, one loss doesn't change your confidence, and one loss does not force a reaction. Most beginners risk way too much, 20%, even sometimes 10%, sometimes more than 20%. That is not trading, that is account roulette. And the fix is very simple. Risk 1% or less per trade. That's it, especially with a smaller account. This is pivotal. When you have a smaller account, you tend to increase that number. But the reason why this works is not because it's magic. It's because it keeps your account alive to trade another day. Section number 4, the math. And it's very, very simple, elementary math. Let's make this very easy. If you have $1,000 in your account, 1% risk means you can lose $10 on a trade, because $10 is 1% of 1,000, and 1,000 is your whole account size. That's it. That's the math. Risk management here is not, I feel good about this setup. This one looks so perfect. I'm gonna make it back later. No, just $10. $10 is the risk. If you lose, fine. You're fine. You can take the next trade calmly, and you, again, put 1% on the line. That's the point. Risk is not about confidence. It's about damage control. And a damage to your account is what you're trying to control in this aspect. Section number 5, why you don't blow accounts when using this. So here's the truth. Accounts don't blow from small losses. They blow from one huge oversized trade, followed by emotional trading, which is followed by having no stop loss. So when you risk very small, losses do not scare you. They do not blow your account. You stop revenge trading and you stop forcing trades. Jack Schwager is a prominent trader, and he says, if you don't have risk management, you have nothing. That is what professionals are saying about this game, and why I make videos on this channel and wanted to make this series, because when he's saying that, what he means is if you survive, your account can improve. You can improve. But if you blow up, the whole game ends. There is no more trading after that. The only way you can trade is if you have a live account, and risk management is the only way to make sure you don't do that. Don't wreck your account. So if one loss keeps wrecking your mindset, this is why. Go back, take some steps back, fix your risk per trade. And in the next video, I'm going to explain why this literally feels so boring, but why boring is exactly what stops you from blowing your account, and it's not what you're gonna think. Watch part number 3, and if one trade can ruin your confidence, ruin your account, you're risking way too much. Small losses are what keep accounts alive. You might just think that your losses are always the market's fault, from the news to volatility to the reversals and all that stuff. But the brutal truth is that even the most perfect setup that's waiting right there with 600% gains, waiting for you to just snatch it right up, can still be completely messed up. And most traders don't even realize that. So chasing after better setups, better strategies, and better indicators may not be the problem, because I see it every single day with students who are legitimately intelligent in trading. They know how to trade. They know their setups and their risk. They know their trading math. It's all there. And yet they keep blowing accounts. The reason why is because the trade itself is not the problem. It's how they approach it internally. And by the end of this video, you're going to see why any trade, no matter how clean, how A+, how perfect it is, can still be ruined, and what to do instead of just throwing more money at it. If you want to hear what I have to say on this topic, make sure to subscribe to this channel and smash the like button so that you don't miss other videos like this. And if you want to take this topic deeper, I have a private training you can watch for free. It's the first link in the description box. I'm going to break this video down into parts. Part number one, the market is not your enemy. The market doesn't care about you. I'm so sorry, but it's not out to get you. The reality is most traders are going to blame the market anyways. But if you actually think about it, every single loss you've ever had, doesn't matter how many of them, but were they all because of the market? Sure, some news hit that you weren't aware of. There were some setups that were invalidated, but the majority of blown trades and losses are you. It's your behavior. It's your approach. It's your internal state. And I want you to take a second and really consider that. Any trade you make, perfect or not, can be ruined if your brain is in the wrong place. And the part that shocks people is that you can know how to trade and still be in the wrong state. That's when the greenest trades turn red. And that's when your discipline is going to collapse. And when you justify just one more trade or justify over leveraging. Part number two on why your internal state is going to change everything for you, because it changed everything for me. I call it your internal state. And what I mean is the way that your brain feels and reacts while trading. Are you focused? Are you calm? Are you neutral? Are you carrying frustration? Agreed. There's some boredom, fear from the last trade. It doesn't matter, but even one tiny misalignment in your state is enough to blow a trade. It doesn't matter how perfect it is. You can see all of the signals and the math and the risk, and it will not matter if your brain and your mind is not aligned. You will make decisions you don't even notice until after the fact. But most traders don't even stop to check this. They trade because they know how. You know how to trade. They think that's enough. You know how to read a chart. You think that's enough. But the thing is, knowing how to trade is not the same thing as trading with intention. And so if you keep thinking your losses are the market, you're never going to get this. You're always going to blind yourself and feel like, oh, it's the market's fault. You're never going to actually want to look at this. But the market is a mirror of your internal state. And every loss is a reflection of the trader that you brought to the market. And the myth of fixing the loss, which is part three. This is where most people get trapped, because you take a loss and your first thought is, I need to get this money back. So you add more money to your account, or you push your leverage, or you reset your account and you push harder and you chase setups. And the worst part is that you feel like this is logical, because it is, because you already know how to trade. So why wouldn't you go? If you know how to trade, why wouldn't you just go back and try again? But the problem is you think you can brute force it. And that's exactly the wrong approach, because more money does not fix a misaligned internal state. Money can't fix that. Continuing a trade doesn't fix that. Trading again doesn't fix that. All those things do is stack more mistakes on top of the first one. And the kicker, really the funny part, the better you get at trading, the easier it is to lie to yourself. Because you can see the setup, you know the math, you've done this before, you've made profitable trades. You can rationalize literally everything. You can literally rationalize something that's completely misaligned. And that's where even the most profitable strategies are going to fail, when your state is not aligned. I made a video about the two types of losses. There's only two types of losses. A loss is either the market invalidating a perfect setup, or it was you breaking the rules. There's only two types of losses. The critical insight is that neither of them are fixed by taking another trade. None of them are fixed by adding more money or reducing or increasing your risk. Your job is not to fix those trades. Your job is to align yourself before the next trade. And in that video, I go deeply into how to do specific solutions for both types of losses because they're not the same. You might be trying to fix one type of loss with a different type of solution and it's never going to work. So watch that video to know what strategy to use for what type of loss. But the market is literally a probabilistic environment. Nothing is broken in the market. The companies and industries and the institutions making multi-million dollars every day don't care about your 10K month. They're not trying to get you out of the game.